Officially, good morning. Happy Sunday. Welcome out to the Market Watch Group Sunday Market Insights. My name is Scott. I'll be your host. As always, real quickly, let me just cover some housekeeping matters. Remind you that this is for education illustrative purposes only. We don't give advice or recommendations. We're not brokers. We're not advisors, yada, yada. What's our agenda? As I said, posture. That's the first thing, most important thing. Let's get the scoring done. I'm going to try to, once we transition here, I'm going to try to knock it out in the first half an hour. Then we will talk about the implications of that posture. What does it mean? We'll look at the week ahead. We'll talk about what sectors we want to search. You're not seeing the agenda? I thought I had my screen up, but apparently it was not up. Is it now? Sorry, I thought that was on already. Thank you, Stephen. All right. Now you can see, having already heard the agenda. Let's go get into it, shall we? Let's orient ourselves. Let's talk a little bit about the narrative, the story that we have seen, what has happened, what it means to us as we come into this week's scoring. So it goes all the way back here. You can see this was right as I as I left on my trip, and then the market just took a little bit of a knock, and you can see what happened. Our score dropped to a 6. That 1.25 was a pretty good drop. Then we dropped a half of a point, and then we stabilized, and we thought maybe we got through it, and then no, one more week down. So throughout this, once that first week, we were cautious. By the time we got to the second week, it's not like you're just slapping. Our trading activity dropped. Our number of trades dropped. Our risk dropped. So, as if you are a beginner, if you are newer in trading, one of the things that you're thinking about is, how am I connecting, right? How am I connecting this analysis of the market, the big picture, like Sandy said? Stephen, I know, right? Stephen said I'm banned from December. Agreed. I'm going to go on trips in May like everybody else. Okay. Yes. So at this point, the question then is, when do we start? And you can see what's happened down. Last week was our first week. That was a pretty big drop when we went from 5.5 to a 4. Then we got a point or a half a point back. So last week was the first time that we actually increased, and we stabilized still at a solidly bullish score. If this market were to go into a full correction, and a full correction, remember, is that we dropped 10% from the high. Right now, we only dropped about half of that, and our score dropped down to about a 4. If we dropped the other 5, our score would work its way down, and at that point, it would be 0. I mean, the last time we had an actual correction like that, it like very, very barely dipped into a negative score, like minus 0.5. And you might think, does that mean we're bearish? If it goes to a minus 0.5, is it bearish? No. -1 to 1 is neutral. Bearish is all the way down to negative. Remember that a market's not going to be called a bear market until 20% off the highs. Now, we've already said that we're willing to start trading bearishly, but it would really be this next little bit on the next 5%. That first 5%, when it drops from its high to the 5% down, the only thing that I would ever expect to have in place would be a hedge. That's it. Just a hedge. I wouldn't expect to have bearish. I'm not like, oh, let's get a bunch of bearish trades on. What? Just listen to it. A bunch of bearish trades. What? Are you bearish? No. Well, no. I've had some negative momentum that's dropped my score, but it's again right now this week. The last thing we would want to do is be like cleaning up a bearish trade mess when the market starts giving, if and when the market starts giving bullish trade signals. You don't want to have that type of bipolar positioning in your trading, right? I get that we're like, oh, we're traders. We can trade up, down, sideways. We can trade diagonally. We can. But the question you should be asking is, can you? Yes, absolutely. You can do anything you want. Should you? Probably not. What we should do is align your trading with the market. That's part of our Be Water philosophy. Okay, that's my soapbox speech for the day. Let's get into the actual analysis. You can see how solid it is. It's 12515. It's been that score for a long time. Let's go see why that is, and that will help us see if there's any change in our score. I mean, that looks fantastic. This red line back here, this purple line back here. There was a purple line back here that was even slower, and then it got to red, and then it got to green, and then green took a step back to blue, and then blues. So that's where we are now. If it were to get above red here at this little intersection, you'll notice where those two are going to intersect right there. Let's actually zoom in on this a little bit, since that's what's important. The only way I would put it back to a 1.5 is if it gets up here to red and keeps on going through it. Or if it gets up here, pulls back, hits blue, and then bounces up to blue again, great. That acceleration, fantastic. I feel pretty good about the 1.25 right now. I feel like that's representative. If you're a 1.5, I wouldn't be like, what? I do not see where you're getting that from. I can't imagine. I mean, 1 to 1.5. That makes sense for the angle, for what we see. For me, that's how I see it. Let me know. We got a great group. Let's get just a little bit of back and forth. I'm at 1.25. Do you agree? Do you disagree? Are you thinking about changing your score? Where do we stand? For me, unchanged. So as I look at this, 1.25 holds. All right. Next. Short term. That's where I thought we're going to get something, is the short term. So let's switch this to 6-month daily. Okay, now this thing, right? Remember what was happening. It was coming down, and we're talking about, look, we're not trying to at any given time, once we can connect some dots, make a change to it. If and when, and you can see back here, this is when it happened. On December 18th, we had that big first red. Most of the loss occurred on that day. Bam. Right? From this point here at 586, we only tested about 10 points lower than that. So we dropped, we went up, couldn't get high enough, dropped, but held the low, lower high, lower low, and then we got here, and then boop, 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 just kept going. Right? We just kept going. We said right back here in this area. Why can't I find my drawing tools? I need drawing tools. There we go. In this little area, we said we're still a 4.5 or a 4 on our market posture. And if this thing breaks and moves, you need to have these trades on or you're going to be a spectator. And that was exactly what happened. So the trades that we looked to put on in there, Cisco, that's what worked well. Walmart a couple of days later, which we're still in, which has a little bit more of a defensive orientation to it. Right? That's what we're looking for here. Now what's happened is it broke this consolidation. I'm not scoring this. I'm just kind of like talking through the posture score at the same time as this. So what happened here? Well, we took out this high. And we took out this high. And we took out this high. I would say that's actually there's, now here's what happens. Someone's going to be like, well, it didn't have any volume. Oh, we're not talking about volume yet. Don't let the next indicator bleed backwards into this one. We don't talk about this. Is only the price action. I'm actually looking at this thinking this is maybe because it didn't just take out one high, it took out 3 highs. For me, minimum 1/4 point. My question for the group that I want to put out there, is it a 1/2 point today? Was that move from here to here that took out 3 highs and brought it to a new all-time high? For me, a minimum 1/4 point. 1/4 point. But does it get another 1/4 for any of those levels, or for the fact that it gets it's a higher high? It took out some highs, higher high. I'm kind of feeling this. Unless I see some strong arguments saying, no, Scott, you can't just give it a 1/2 point. I'm like, well, I can. It's my spreadsheet. You can give it whatever you want on yours because it's your spreadsheet. But if there's logic behind it, I'm willing to listen. I've got Sandy saying I agree. Steven says I agree. 5 is acceptable. Makes sense. All-time high. Taking out previous. Scream. Yeah, right? We're not trying to knock a square peg through a round hole here. We're not trying to make it fit what we want it to fit. We're trying to look at it and say, what's representative based on this scoring model that we have that encapsulates what happened. And as I look at that move, when do we see a move like that? Oh, I see another one kind of like that back here. And guess what? That also occurred at a time after some kind of a, negative. And what did it start? It started this trend. That's kind of what we're hoping this does, is it breaks out of this consolidation and it starts that next 3 months. 3 months. Where does that put us? February, March, April, which we had said cyclically. Yeah, all of this makes sense. Let's make sure that it connects. So I say yes. I say we give it the full. That's a nice, not a 1.23, the full 1.25, which is interesting because it gets this jump, and I'm actually thinking that volume is likely to stay exactly where it is. I think that's kind of what makes this an interesting process. Let's go 1 month, 1 day. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. I've got 19 days And I feel like there's disparity. Everyone else has 19? Is that everyone's good there? Bring this down. Okay. I've got 4 sells and a tie. 4 sells and a tie. I mean, realistically, there's no buying days on here. This one got close. This one got close. 4 sells and a buy. Honestly, I'd be like, if that's all I saw, there's a chance I'd be leaning and thinking, do we need to go to a minus 0.5? Sanity check says, wait a second. My sanity check, due to this last little surge, where I just connect the dots, is actually slightly positive. So I'm definitely not going to say a minus 0.5. I could see where, I can't. I honestly feel like minus 0.25 is the score. Even if these were to be thrown out, remember that these are stale. This last week is a stale week. Let's throw that out. Still 2-0. 2-0. So I'm going to leave mine at minus 0.25. Next week, this will be stale. This will be closer to the stale area. And then depending on what we get now, so over the next week, that's going to really dictate the volume. If we get one good buying day in there where it's like the buyers just push it hard, honestly, we could see this one go a half a point next week, but not this week. For me, I'm going to keep it where it is, minus 0.25. Tell me if you agree, if you disagree. Keep the discussion going amongst yourselves. Why 19 days instead of 1 month? Well, 19 days is 1 month. That's 19 trading days in 1 month of 1 calendar month of time. So just based on holiday and things like that, right? That's, if you notice down here, I have a full month. So this is a 1 month daily chart. And it's going to have anywhere from like 19 to 21 days at any given time. Okay, great question. Right? That's a great question. Like, why 19? That doesn't make... Keeping yours at minus 0.5. Okay, that's fair. That's fair. I'm keeping mine at a... I'm keeping mine wherever it is. Yeah, okay, so that looks good. So far, so good. Good progress. Major market. Let's go see what these guys have for us. Okay. Coming into this one at a half of a point. Why a half of a point? Just to kind of set the tone. Because and you can see it's come down from a 1. So what caused it to fall from a 1 back around December 15th? And that has been the small caps moving out of a leading position and back into a, with the market position. It's back into that fighting with the Dow to see who's in third, right? That's what's happening in that area. Let's see if there's anything shifting within that analysis. So you can see here, NASDAQ on top, S&P in the middle. From this perspective, the Dow actually pushed a little ahead. So One of the things we have to be mindful of is if we start to see any let up from the NASDAQ and the Dow moving fast enough relative to the Russell that we start to assess that as a defensive posturing. We haven't done that yet. And I'm not going to just be like, oh, look, green's above blue. That's defensive. No, that's not it, right? But we are definitely paying close attention to this battle for third as we move through. Now here, when we change to the 133 days, you're like, oh, well, look, now blue's back on top. And so now blue's, we're trying to process this, get a sense for it. This is interesting here because from summer, this has the drop. This was when the NASDAQ had a full correction back in the summer. So we still have that piece here. But when we move out and we are back into a perspective that's past that, what do we notice? We have the NASDAQ back on top. We have the Russell slightly ahead of the Dow, and they're still fighting for third. So with all that and all that noise, what do I come to? Still a 0.5. Still a 0.5. It's good. Well, tech's definitely back at the top here, right? You can see the NASDAQ on that 133, but just in this last little bit of momentum, the NASDAQ's definitely been strong. So I agree. But if we want to score this higher, those small caps have to start to move back into this. It doesn't have to lead the whole thing, but it definitely has to get on the other side of the S&P. It's got to demonstrably be ahead of the Dow. There's no concern with my score, but I am going to go take the look at the 22. What is the 22? Steven says he wants to see it. Or RCB Press says he wants to see it, the 22. So this is interesting because this here, which includes the drop now, right? That's literally what we're seeing is right from the drop. Am I all the way over? Oh, I wasn't all the way over. I was like, wait a second. It shouldn't be from the drop. It should be after the drop. Now I feel like I have to go back and make sure that my 66 was good. Okay, it was. Sorry. What does the 22 show us? Everything's moving pretty similarly as we drop down. Pretty similarly as we moved up. The Dow is ahead. But do I see that as like, oh, look how defensive that is? Or do I see that as everybody's moving up? And in this instance, they dropped less than everybody else. You can see when they dropped, they didn't go down as much as everyone. Here's green. And so now they've topped a little higher. Okay, let's keep an eye on it. But for me, I'm going to keep my score the same. Sorry. Okay. I'm going to keep my score the same, which is a 0.5. Where are you? 0.5. Still good. Sector rotation. So the sector rotation has been really interesting. Really interesting. As the market has gone through this little topsy-turvy action, the long term has held up, and sector rotation has held up. Actually, the VIX has held up pretty well too, right? It's really the volume turned around, the short term dropped some, but sector rotation never dropped below a 1. There was never enough of a realignment where I'm like, I'm gonna shift my numbers. So let's go take a look. On the long term, who's leading us? We have a lot of different shifts, but right now it's discretionary, right? Discretionary looks fantastic. Financials are up in that mix. Utilities are still there, which has been an interesting one. Communication services, technology still there, and industrials. And then we drop down and we have staples, we have healthcare, we have energy, we have basic materials. This overall posture looks great, looks bullish. When we drop down to 133, that's when we see like a little bit of hiccups. But even here, what's the hiccup? Discretionary, still on top. Financial, still on top. Utilities. AI/crypto driven. Communication services. Industrial. So all of our favorites except, interestingly, from this perspective, technology is still struggling to recover. You can see back here, back in that summer, tech was really is where things got beat up. But they recovered quickly and gave a lot of opportunity. So everything else, energy down, staples down, materials down, healthcare down. Now we zoom in, we get past that little blip, we get to this point. Still consumer discretionary. If I were to flag a sector for Tuesday night to look through, it would be consumer discretionary. Okay. Communication services, strong. Financials, strong. Technology, you can see, is moving back into like ahead of the market. You've still got energy's been done okay here. You've got industrials picking back up. Utilities down below. Staples down below. Healthcare down below. Materials down below. None of this is surging. Could this be considered Xmas demand with regard to discretionary? I mean, it's all it never waned. So yeah, I guess you could say it's a bleed over. I mean, the whole group has stayed just quite favorable, right? So my one prevails. There's nothing here that makes me think, oh wow, look at this. There's money flowing out of what? I don't see it. If you see it, tell me where it is. Let's make sure we definitely account for it. Let's take a quick peek at the 22. Weirdly, energy had this little bump just recently, but it's pulling back now. We'll keep an eye on this. What does that mean, we'll keep an eye on this? It means that if this were to, on this pullback, turn again higher, that's a higher high, higher low. Keep an eye on it means we'd probably look to trade it. Yeah, so that's the second one. We have XLE, we can always trade, but we might want to go put a couple of energy stocks on our list to match what this is telling us, which is there's been a little bit of a surge in that sector. It's not enough to be concerning yet, but it is enough to pay attention. Here's industrials, just financials. Healthcare's moved up a little bit, but again, this is just in the last month. None of this is that impactful. Staples is down at the bottom. Yeah, I'm gonna keep mine at a 1. I like the way it looks. Let's go wrap up with the VIX. Oh, I've done pretty good today. I'm 3 minutes late. We'll get this VIX score done, and then we'll talk about implications. Seems like we're not really expecting like people to join late, but I just want to make sure that beginners know that it gets less technical and more about actual step-by-step advice that you can take with you as you move into the trading week. Okay. Let's talk about the VIX. So this one was interesting because it got hit. It got a half a point knock on that first one. That contributed. Then it got another 1/4 knock. Then it actually got some back. Then it gave it up again, and then it got some back. So this is going back and forth. And you can kind of see like it spiked up, and then it came back, and then it worked. So let's just kind of map this out. So here, it did have a higher low. It did spike. And then it came all the way back down, and then it had another higher low. And then another high, a little bit of a move up. And then another higher low, move up. Okay, now. It also had a lower high. Right here. But this failed when this came in. So when that failed, that means that this became the next lower high. And that one is what helped push things forward where we are now. So what's happened? Last week, so these are the things that would say this would be plus 1/4 here. And then it went back minus 1/4 here. And then it went plus 1/4 here. So that's kind of that back and forth. You can see we actually took out this low, so we got another 1/4 there. So that's where we stand now. Last week, we already scored that 1/4 point. If you go look at what our scoring is, lost a half, got it back, gave it up, got it back. That's here. So is there anything to give it another 1/4 point? No. No. So we took this out on this day. We already scored that last week when it got to a lower low. If it would have taken out this one, then we could be like, let's give it another 1/4 point, but it didn't. So what will give us another 1/4 point? If it goes up and rolls over, then this high is lower than this high. That would be another 1/4 point. And then if it takes out this lows, that would be another 1/4 point. And at that point, we're back down at 14, and we're back up at 1.5, 1 3/4, right? That's what it's going to take to move us back into that area. I think that could definitely be in the works, but for now, no. So interestingly, we did jump a 1/2 point, and it all came from the short term. I see another 1/2 point potentially brewing here, another 1/4 point brewing here, maybe a 1/4 point here, 1/4 point here. So we could easily get back to a 6 with just a couple of weeks of, things just continuing in the right direction. But for now, it's a 1/2 point higher again. So now we have 2 weeks in a row where the posture score has improved. We've stabilized in a solidly bullish area, 4, 4.5, 5. That's a nice. We were coming from this area here. Remember that we only got, we got, how long did we get? Before the election, it was pretty good, right? It was 5s, 5.5, pretty good. After the election, we got that bump. That's what kicked us up. And we got a nice, 2-month push. Now what? Well, if we can stabilize and then from here move back into that 6 area as we move into February, March, April, that's ideal, right? That is absolutely ideal. So there's where I stand. I'm a 5 at the end of the day. Sandy posted hers. She's 4.5. Anybody else want to put it up? Who thinks they're the highest? Who thinks they're the most bullish this week in the group? Tell me your score. Bob Rowland is a 5 with me. Is anybody more bullish than us? Let me know. Is anybody... And it's not more bearish because it's not. It's less bullish, right? We're still bullish. Sandy's a 4.5. She's less bullish, but still bullish. Sandy's a 4.75. So there you go. Stephen Stephen D is a 5.5. Okay. He is a 5.5. He might be a little more bullish. Good. Let's talk about what it means. It means it's the second week in a row of stabilizing. As we looked at our watch list, we need to just kind of get to that point. Let's get this back to 6 months. As we look at our watch lists, I think I'm already on the 6 month chart. That's why I can't find it. Oh, yeah. Okay. Part of the problem with this last little piece that we just got, it's hard to trade this if you weren't already in back here. Right? In fact, that last piece is what basically gave us our bullish push this week. That right there alone is what ended up putting that. And if you wanted to get in at that point, right, Press? You're exactly right. You're exactly right. Now that we're up here, the thought is, hey, the volume's diminished. We really feel like we're hitting some resistance up in this, uncharted area of new highs. What's the likelihood? The likelihood now, it could be something like this where we see that grind sideways for a little bit as this turns down, and that took a while before it actually ended up becoming a signal. But that to me was in a cyclical time that's more of a struggling time. That's why I think it took longer and had to struggle harder. From a cyclical standpoint here, as we move into the beginning of February, we've got winds at our back from cyclical standpoint, right? From that standpoint. So my thought process is not thinking, let's expect it to grind sideways for a week, week and a half, then pull back for a week and a half, and 3 weeks later we have an entry down, down here somewhere, right? My thought process right now is flag. We just had a strong march up. We have the winds at our back cyclically. I'm thinking 1, 2, 3, right? 1, 2, 1, 2, 3, and then we're looking for those turns. So, yes, right? If we pull back into next week, you can see on Friday we ended with just a little bit. Our stochastics, if you look down here, our stochastics is overbought. It's pinching. Yeah, it's very difficult to want to trade into a new bullish trade at the end of 1, 2, 3, 4, 5, 6, 7, 8, 9. We had 9 days in this, and we're thinking, what? Now get in at the end? We're looking for something else. Can you explain the technicals of the candle that changed the direction? Do you mean that we're expecting to this one here, or do you mean like this big one back here? Give me an approximate date so I can I heard another trader refer to the pattern that you trade as a break, hook, and go. Break, hook, and go. No. The last low back here. Okay, perfect. No, but I think people just come up with, you'll see people who will they'll be like, this is an inverted head and shoulders. This is you can find different things going on in there, all of which are going to boil down to the same basic story, which is a very specific shift in the balances between supply and demand. And that's what we're really focused on. Supply and demand, right? Support and resistance. You got it. Those are the key things. So here, this candle here, what happened was it gapped down and started there, and then it moved the rest of the day and it finished here. And it actually ended up finishing both up for the day and up relative to the previous day. So the previous day, let me switch my color, was there. So that was the low. So on that day, in fact, if you remember, I'll talk about that day. That candle, when it gaps down and runs up, has a very similar feel to a hammer candle that starts here, runs down, and then comes back up. They actually have very similar implications, which in this case is kind of hammering out that bottom, right? So that and that have a similar type. One starts open, runs down, then comes back up. One opens down and runs up the whole day. But they both finish in the same place, have very similar implications. Okay, so let's get to the watch list. From 8.5 and 8.11, 11.18, would we not expect our new pattern to behave similar? I mean, that's kind of the hope. Is that it finished, popped up, like we kind of feel like we're in this zone right now, right? So is it going to be long and slow, or could it just kind of like pull back a little bit more quickly, but that it's going to kick off the next section of trend? Yes, that's exactly the type of thought process that we're looking to apply here. Okay, let's get to the actual watch lists. I've got a note card ready to make notes about this week's focus list. Love the discussion today, by the way. Great, lively discussion. All right, starting at the top, Apple. Apple is not open for business. It is still excommunicado, right? There's nothing there for us. Amazon looks great. It's back in business, right? It's back in business. It's broken above. That's what we've been looking for, is breaking above these consolidations, getting these new highs. Now we just wait for that next little pullback. It could be 2 days. It could be 5 days. It could be 8 days, right? We don't know. We're just patient but prepared is kind of the this week's soup of the week. And we're going to see over and over again that pattern, right? Anything that's made to a new high is back where we're like this. The buyers have regained control. Great. I love AXP right now. AXP is one that's starting to move right after earnings. It's already now in this path. If we gives us a couple of days and then we see it turn, that's all. That's what we're looking for. Those types of flag patterns, things along those lines. I love it, Sandy. Okay, AXP on the list. BAC, oh, well, looky. We've had the pullback. It got the new high. It's pulled back. Here we are. Price is just itching. It's just right in this area. If I can get above that, that's going to give me a turn down here probably as well. That's likely to generate something for us, right? Okay. BX on the list. Financials looking well strong again. Look at these industrials. Industrials are looking strong. CLS looks fantastic. Cisco, we locked it in. Although if you carried it into next week, I am not going to fault you. I took the rest of mine. Everyone that I heard from who took this alert took the rest of theirs. You can see it just sort of followed the path. Was it like this banger home run, or was it just a nice, steady, profitable win? a nice, steady, profitable win, which in the month of January, come on, right? Okay. I will also put it on the list for another go around. Delta, put it on the list. New highs, pulling back. Fast enough. Okay, there's another one. Another early contender. Where's this coming from? This is coming from industrials. The entire way this dropped down, you can go back and run the tapes. We said, what does it have to do? It has to do something that looks like this. And then it has to do something that looks like this. And when it gets into this area, we're thinking to ourselves, okay, right? Okay. That's an early contender from the industrials. Flex looks strong. I'm going to hold off putting it on the list because the earnings are just like right there. There's still one more round of earnings on the 29th. Is that when this is? Yes. Big round of earnings on the 29th. If you're new, you maybe haven't yet, and you maybe are like, yeah, some people are going to convince you there's just a lot of potential. Everybody finds their way around earnings and what their path is. I don't hold through earnings, short-term trades. Now, if it's an investment, you're investing. You're going to hold through earnings. But if it's a short-term trade, I don't hold. So if I see that and I don't see that I have time to get in, I'm not going to take any trade on it. I otherwise would love the way this looks like it could be pulling back. Bitcoin looks like it could be going into a cup and handle type pattern. GE Vernova, very strong. GEV. Gold. GM, no. Google is still a yes. Google, I was in a battle, but it squoze a little bit for us. There's better, though. GS looks great still. Howmet looks strong. I got to tell you, all that patience, now we're waiting for the signals. We've waited for the buyers to regain control. No there. Yes there. They've regained control. Now what? Now we're waiting to see that next cycle shake out. JCI, put it on the list. Industrials are looking good. I'm ready for another trade on KKR. As soon as the signal comes, I'm going to take it. That's one of my favorites. MasterCard looks good. You can see the strength across financials. Meta looks good. So Meta, I did not trade that one, but I'm ready to trade it again now that it's busted out. Our watch list is chock full of strength, right? So I feel good about that. Microsoft is regained. Still in Meta. Well done, Steve W. Well done. Love it. Microsoft is on the list for the first time in a while. NDAQ. I love when I write on a note card with a date. I love when I run out of room and I'm just like finding a place to put it. I'm going to wait for Netflix to kind of come back down to earth. NVIDIA is back to a go. Here's the deal. If you ever are like, I'm feeling more bullish, then you go through your watch list and you can't find anything that actually looks like it's setting up for a trade, guess what? Reevaluate the premise. If we say, hey, look, we're increasingly bullish, we should come to our watch list and be finding all kinds of different things in different sectors. And guess what? We are. Right? That's a nice little confirmation. PLTR was an almost continuation trade. Little expensive, but that looks good. Ooh, wait a second. Earnings. Goodness, earnings. All right, we'll pay attention to that. Roblox. You know I love Roblox and Reddit. Those are both strong, good communication services stocks that we have added and traded. Rocket Labs. I'll still watch it. We missed a signal on this one. I mean, we didn't miss a signal. We missed it just sort of took off without us. I mean, that's nothing that we could have done. SoFi, earnings, but definitely willing to trade it after earnings. TJX, back in business. Oh, yeah, messy. It's messy this week. Toast. I feel like we could definitely see a nice 3 alert week. We haven't had one like that since this little hiccup began. Tesla is no for me. TSM is yes for me. Oh gosh, we remember Twilio? Goodness gracious. Twilio. The bullish dollar just kind of hovering back at a better area for the market. There's the VIX. VRT. We like VRT. Very strong. Oh, our watch list is just popping. Victoria's Secret, not yet for me. Walmart, we're in it. It's looking great. It accelerated. Fabulous. We're feeling good about that. Moving on up. Okay. That's the watch list. What's next? Okay, we're going to finish on time today too. Amazing. The journey continues. Last week, if you're new and you're like, wait, we did this last week? Yes, we finished section 1. You can still catch up. You're only one section behind. Real quickly, what do you need here? I want you to give me 3 strengths and 3 weaknesses as a minimum. 3 and 3. These are just bullets. 1, 2, 3. What is your strengths? What are your weaknesses? Then give me a paragraph each. A paragraph each for commitment and discipline, mission and statement, and vision statement. Okay, what would that look like? It would look like sample trading plan. There's your strengths. There's 4. There's your weaknesses. There's 3. There's a paragraph about commitment and discipline. Paragraph about mission statement. Paragraph about vision statement. Now, if it's your first pass, give me at least a sentence. 1 sentence. That's it. You don't have to write an essay or a dissertation. Give me a sentence. Just give it a pass and put some time into it. My request is 1 hour a week dedicated specifically to your trading plan. 1 hour. Broken into no more than 3 parts. Either a 1 hour block, 2 half-an-hour blocks, or 3 20-minute blocks. Don't break it down less than that. Now we're moving into market forecasting. So let me go back. Market forecasting is the routine. That's our market posture. That is our market posture routine, what we just did. Long-term trend, short-term trend, volume, major market sector, VIX. Write it out. What do you understand about that? What are you looking for? How do you score it? When you're done, what do we have? We have a market posture. Market posture is our final score. We are a 5. It is improved from a 4, but overall was down from a 7. So we're kind of looking at it in context. It's not just the score, but it's the direction the score is moving and what the implications of that mean. What are the implications for me? Well, it's stabilized at a 4 and is now back into a 5. I'm going to look to put more trades on this time. I've got signals across all 5 growth sectors. So I'm looking for more this time than last time. Last time when we put some bullish trades on, we were like, I'm going to put a couple on. Why? Because we were in a negative momentum posture. It was still a 4, so we were willing to trade, but the momentum was down, so we traded less. Now we have momentum on our side. We have the market on our side. I'm going to look to do a little more. That's what I mean when I say connect
my market posture to the implications of my risk management. Yeah, better market, take more risk. The market continues to improve, keep taking more risk. Eventually, you'll get to a point where you're like, this is the maximum. I'm loaded. And then we're always on the lookout for things like hedge signals and things like that, right? On the market forecasting, have I ever considered how the bond market is behaving to measure the impact? Honestly, there is a correlation that you could find, but they tend to just be correlative more than causal, meaning whatever's going on in the broad economy is going to affect them typically in a way that you would expect. So we look at interest rates, and interest rates impact the bond market and things like that. So I've had people who are like, I'm going to add TLT, which is the 20-year bond ETF, to theirs. Great. No problem. I've had, there's always things you could add. For me, I want this posture analysis to touch on some core economic strength, but really hinge on institutional investment sentiment, which you can see with the long term and the VIX and the volume, how we really look to pull that institutional sentiment into our analysis. Great question. So market posture. So you're talking about, what does this final score mean, right? It's not just like, hey, I have a posture score. Great. What are you going to do with it? Market posture leads to trading posture, right? So right now we're saying that we're more bullish, but we're patient, but prepared. So my trading posture is still a little bit cautionary, like, hey, we seem to be pushing some resistance in the market overall. We just went up for 8 days. There's a good chance we're going to see a pullback. Let's not slap trades on only to have them pull back and then have to decide, do we stay with them if we can wait, if we can be patient. So I'm thinking trading posture is, what am I going to do now? That's why, right? We meet tomorrow morning. Nothing changes between now and then other than the futures are going, everyone's getting ready, and it's a different vibe. That's when we transition from market posture to trading posture. What are we going to do today, Monday? What are the implications that you should be coming away with every week? What types of trades are you looking for? I'm looking for bullish trades. I'm looking for bullish low implied volatility trades. So I'm looking to buy options. I'm not super concerned that options are expensive right now. Otherwise, the type of trade might veer into more spread trading, things like that. Length of trades. Yeah, we've moved into more of a 7 to 10 day type parameter, possibly even shorter than that when things start to move a little bit quicker. Risk management adjustments. What does that mean? It means that when I take profit, am I going to take half? No, I'm only going to take a little bit so I can let the rest of it run. If it's a stronger market, I want more running. When it's time to close, right, and I sell, I'm going to sell one and then tighten the rest. That's the types of things that I'm thinking about. Trade strategies and systems. I'm looking for all my bullish systems, all my bullish strategies. If it's bullish, I'm thinking about it. Trade management tactics. So am I going to tighten stops? Am I going to scale out? My scaling out right now is going to be less. If in a market that's more choppy, you're going to sell more positions. You're going to scale out quicker. But in a market that's more bullish, you're going to stay in. I'm not going to take losses easily. I'm going to maybe, if I have a loss come, I might say, hey, this is a hiccup. I'm going to give it an extra day or two. So scaling out refers to, if I have 8 contracts and it gets to my first target, do I sell 1 or 2 or 4, right? And if it gets to my next target, do I sell all of them or do I sell 4 more and keep 2 that I can just hang on to? So how I move out to try to stay with the trade, that's the scaling out process, is right? Rather than just all or nothing. When I get out, I can scale out, sell a little bit, keep a little bit, pare the position down. Yes, sir. Okay. So that is what we're doing for market posture, or for market forecasting. What does that look like? Let me show you real quickly the sample plan. You're describing these routines first. Then when you're done, you're going to talk about what is your market posture, what is your trading posture, what are the implications at any given time, etc. So remember that this sample plan is available to you to download. You can download a copy and use it to help give you some ideas and starting points for your own trading plan. Okay. I said we'll end on time, and I was a liar, a big, fat liar. We ended a little late. How's everyone feeling? I feel like we should be pretty happy, feeling pretty good. Moving out of January, maybe into February to see some things kicking into our spring rally. That's what I'm looking for. I will see everybody tomorrow morning, 15 minutes before the market opens. It's great to have everyone. The energy today was fantastic. Enjoy the rest of your weekend. And as always, happy trading.
Recording